Hi, this is Kribakaran Rajendran. Welcome to another video with Grow. So in this video, we're going to talk about equity intraday trading strategy. See, when you're trading with futures or options, you have very limited, no overall different indices. You have Nifty, Bank Nifty, and Fin Nifty. These are the three indices most of the option traders or futures traders decide to trade on. And there is no complexity required to choose which index to trade. But when it comes to stocks, you have multiple different stocks. You have stocks from mid cap, small cap, and then you have some different universe like Nifty 500 futures and options. So you have so many stocks, and when you create a trading strategy, that trading strategy might give you signal in multiple stocks. So how do we decide which strategy to choose? And then how do we decide which stocks to implement these strategies? Whenever market opens, there will be huge supply and demand that will be coming into the markets within the first 15 minutes. So there will be some list of buyers coming in, there will be some list of sellers coming in, and based on the respective supply and demand, based on the buying pressure or based on the selling pressure, the stocks might start trending from there onwards. So we have to identify whether the buyers are strong or the sellers are strong. So how do we identify that? So that is where the opening range breakout methodology greatly helps here. So people call it as ORB, or people name it as ORB trading strategy. So what it means is opening range is calculated. So if market opens at 9:15, you wait from 9:15 to 9:30 and see how the markets are moving, whether the buying pressure is coming in or the selling pressure is coming in. Based on that, the stock might move up or move down. And if it starts moving up, we are going to go long in it. If it starts moving down, we are going to go short in it. At which time we are going to go long, or which level we are going to go long or go short, will be decided on that range calculations. So first we have to decide what is the opening range. So choose any stocks, and in that stock observe for 15 minutes. Check what is the high price of that stock, check what is the low price of that stock. When that high price is crossed, you're going to go long in it. When the low price is crossed, you're going to go short in it. So let me explain that with an example so that you could clearly understand. So this is an example of how the opening range is to be calculated. See, I've taken a 5 minutes candle here and I've just plotted it. And as I mentioned earlier, we just have to wait for the first 15 minutes for the stocks to move certain levels. It has to form certain range. So as you could see, the market opened here, where the opening price is denoted. And then there was a low price, whatever the first 5 minutes, and then the next 5 minutes, and then the next 5 minutes. So the first three candle totally is equal to the 15 minutes range. So in these first three candles, find out the high level and find out the low level. So the high level is formed in the second candle, as you could see, which is mentioned as opening range high. And then the low level is formed during the first opening candle itself. So you wait for first 15 minutes and see where the high and lows are. If that high is broken, then go long with the day low as stop loss. If the low is broken, you have to go short with the day high as broken, which is nothing but the opening range high and opening range low. So all you have to do is find out when the opening range high is breached. If high is breached, you just go long in it. And if opening range low is breached, you just go short in it. And the stop loss that you need to use is vice versa. If opening range high is breached, then the stop loss should be opening range low. And if opening range low is breached, you have to go short and the stop loss should be opening range high. That is all. This is the simplest rules. So we have the rules right now. So we are going to use opening range breakout as the rules. But what stocks to trade? Which stocks to trade? How do we decide these are the stocks that we need to trade with this strategy? So this is where we need to club the news and the quantifiable factor. See, whenever there is specific news about a stock, what would happen? The price will be reacting towards that news. So when the price reacts, what happens? There will be certain gap up or certain gap down. So all we have to do is, instead of going and monitoring the news, we are going to directly monitoring the price, because the price will react based on the news. So we have to check what are the list of stocks that has gapped up or gapped down for the day. So at least have a minimum criteria of choose the list of stocks where the gap up is more than 3%, and choose the list of stocks where the gap down is more than 3%. We'll pick those stocks and then we'll apply these ORB rules into those strategies, those stocks. So let me show you two things. First thing is, I'll tell you how you can apply this opening range. So instead of you manually marking these levels, I'll tell you a free indicator that is already available in TradingView, which will plot you the opening range high and opening range low for you. So all you have to do is check whether that particular level is breached. If that particular level is breached, you just have to go long or go short. And then I'll show you a screener that will tell you, like if you just run the screener, that will automatically tell you what are the list of stocks that are satisfying the gap condition. By using these two, you can easily trade it. So first you have to go to this website called chartinc.com. So once you go to this site, you just have to click on screeners here. Just click on screeners here and then type gap in the search and then click on search scan. It will now list of screeners which I've already created. You click on the first one which shows gap up or gap down stocks. So once you click on it, it will show you the condition where the two conditions are met. Like two conditions have been mentioned here, which states that find out what are the list of stocks that has gapped up more than 3% today, and find out what are the list of stocks that has gapped down more than 3%. So both the conditions, whichever is satisfied, it will show you the list of stocks. And the condition here is it chooses all the stocks which belongs to cash segment. So here you can select cash segment, that will show you all the stocks which belongs to small cap, mid cap, large caps and everything. And if you scroll down, then it will show you what are the list of stocks that is that are satisfied this condition. So all you have to do is pick those stocks and trade it. In case if you wanted to download the backtest results, like I wanted to know historically how many number of instances such as occurred, or historically I want to find out what are the list of stocks that are satisfied this condition, you just have to click on this download CSV. That will automatically show you what are the list of stocks based on the backtest results. So in the screen, all you have to do is click on here and then select futures, which means that whatever the list of stocks that are part of FNO, that will show up here, and then click on run scan. It will run the same conditions and checks what are the list of stocks that has gapped up or gapped down, which has more than 3%. So based on that list, only Burger Paint shows on Friday. So we'll just go and see the Burger Paint charts on Friday and apply the ORB conditions there and see how we can trade it. So this is the Burger Paint chart which I've opened it in TradingView. So all you have to do is you have to apply the ORB rules, which states that the first 15 minutes high and low has to be tracked, and when that is breached, we are going to go along in it. So go to indicators and then type opening range breakout. So opening range breakout. If you type it, it will show you the list of indicators. So I've selected this one, ORB opening range breakout. So you just apply this. That will automatically plot the first 15 minutes or first 5 minutes, whatever the conditions you mention. By default, it will show you the first 5 minutes. So you click on the settings, you right click here and then click on settings. Then you increase the time frame from, we have to check the range from 9:15 to 9:30 and click OK. So now it automatically plotted what is the first 15 minutes high and low. So this green line plotted is the high and the red line plotted is the low. So when we are going to go long, when this green line is breached, so around 6:43, that is the level where it was breached, and once it is breached, it went all the way up to 670 levels from by the end of the day. So as an intraday trader who's trading with stocks, you can easily get 5x margin here, and you can directly deploy. If you have 10,000 rupees of capital, you can trade with 50,000 rupees with margin, and you can directly go long in the stock with the red color as a stop loss, which is the ORB low. So let me show you how you can execute this with respect to Grow platform. So you just open Grow terminal and then open the Burger Paint chart. So as per our condition, we have seen that the first 15 minutes high is, this is the level, so 643. So this candle high is 643.5. so we have to go long when this level is breached. So by 9:30, you just log into the platform and you have found the high price here. So all you have to do is click on buy and then click on this filter and select SL order here, and then like type whatever the quantities that you want to buy, and trigger price is 643.5, which is nothing but the high price. So since now it won't allow you to enter it, because since the market has already gone past. But by 9:30, that is what you have to do. You just have to log in and enter the price, the trigger price. Whenever that is crossed, automatically it is going to get executed for you. So this is what intraday equity trading strategy is all about. So basically, we're applying two different rules. One is ORB and the other one is gap conditions, which primarily based on news. So instead of relying on news, we are relying on the price. Since the price will automatically reflect all the news information, accordingly only gaps are happening in the markets. So we are applying opening range breakout to the stocks which has gapped up or gapped down more than 3%, or on the 3% upside or on the 3% downside. and then we'll apply this opening range breakout. When those 15 minutes high is broken, we are going to go long. When those 15 minutes low is broken, we are going to go short. That is all it is. So you can apply this to with respect to the stocks which are part of FNO, which are part of Nifty 50, any kind of large cap stocks. But I would not recommend you to trade with any kind of small cap stocks or stocks which are not part of FNO, because it is highly risky. It will be highly volatile. So it's better to stick to either Nifty 50 or to the stocks which are part of FNO. So I hope you found this video really helpful. So in case if you have any doubts with respect to the methods which I have explained, please post it in the comment section. I'll address it.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.